In this video, we look at the earnings outlook for the TSX Mid Cap Gold producers. Canadian Mining Report is not a financial advisor. This video is for informational purposes only and does not constitute investment advice. The TSX Mid Cap Gold producers range from just under a 1.5 billion Canadian dollar market cap down to just over 400 million Canadian dollars, including K92, Wesdome, Karora, Calibre, I-80 Gold, Aura, Victoria, Argonaut, Aris, Orezone, and McEwen. The sector had mixed production performance in 2022, with 7 out of 12 seeing declines in gold output, with 5 down 10% or more, although 3 still had a substantial increase in output, K92, Karora, and Calibre, up around 20% each. However, all the companies are guiding for production growth in 2022, ranging from 6% up to as high as 20%, including outlier Orezone, which estimates a 430% increase as it only began commercial production at the very end of 2022. The strong forecast production growth and an implied rise in the gold price is expected to drive a rebound in revenue growth for the group to 32% in 2023, after only a 1% gain in 2022, well off the strong 27% gain in 2021. And the market expects reasonably strong growth to continue into 2024 at 14%. The gains are expected to be quite well distributed across the group, the main standouts being I-80 and Orezone, with 176% and 549% growth respectively, off very low bases versus the rest of the companies, with a strong 45% rise also forecast for McEwen, the smallest market cap stock of the group. Only a single company is expected to see a production decline, Argonaut, and this is very marginal, down just 2%. The revenue gains are expected to translate to large gains in operating profit, rising 60% in 2023 after a 29% decline in 2022, outpacing the 39% rise in 2021. Most of the group are expected to see strong operating profit gains this year, ranging from 28% to 64%, other than Orezone, with a surge over 3,000% in its first full year of production. Argonaut's forecast rise is muted at 6%, and only I-80 and McEwen are expected to still be generating significant losses. Net income is expected to surge to 361 million Canadian dollars in 2023, up from a $93 million loss in 2022, reaching only about half the $670 million net income of 2021, although the market forecasts the group to surpass this in 2024, rising to $872 million. The 2022 losses were driven mainly by New Gold, I-80, Argonaut, and McEwen, but there's a shift to net income expected in 2023 for the first 3 and widening losses only for the latter. The estimated big net income gainers, apart from Orezone's exceptional situation, are Karora and Calibre, up 218% and 142%. Operating margins for the group are expected to rebound in 2023 to 32.8%, up from 27.1% in 2022, and expected to continue to rise to 42.7% by 2024, above the previous peaks of 36% and 39% in 2020 and 2021. Net margins are also expected to rise in 2023 to 6.3%, up from a negative 2.1% in 2022, and rise again to 13.5% in 2024, although this remains below the 15.5% peak in 2021. Most of the group has operating margins in the 30 to 40% range, with Wesdome and Argonaut in the 20s, and only I-80 and McEwen with negative operating margins. Net margins range relatively widely across the group, with McEwen the only company with a heavily negative figure, and we've not included Aris given a lack of available consensus estimates. The group overall increased leverage in 2022, with its net debt rising to 747 million Canadian dollars, down from net cash of 194 million dollars in 2021, and well off the 670 million net cash of 2020, and there is not enough data for a 2023 estimate. The rise in net borrowing in 2022 was especially driven by New Gold, I-80, Aura, and Orezone, which had little net debt in 2021. And while Victoria is also a large contributor to net debt, it was already high in 2021 and did not rise that much in 2022. As the PE multiple for the group was skewed extremely high in 2020 and low in 2022, so the numbers are not meaningful, there has been a rise in the PE to 24 times in 2023 from 18 times in 2021, although this is expected to decline to 10 times for 2024. Enterprise value to operating profit multiples, which measure what the market is paying for the total company, including both equity and net debt, versus its cash flow, has a clearer trend, showing a drop to just 4.6 times in 2023 from 11 times in 2020, with a further expected decline to 3.4 times in 2024, indicating that the sector is not looking particularly expensive on a cash flow basis. The EV to operating profit multiples are expected to contract substantially for almost all of the companies in 2023, with the exception of Argonaut and Eris staying near flat, and I-80 and McEwen with negative multiples. For more on the TSX and TSXV gold and other metal miners, click the link in the description or bio below to go to www.canadianminingreport.com.